Today, Bitcoin sinks below $30,000 in a broad crypto sell-off. SEC Chair Gensler faces tough questions on Capitol Hill about the agency's crypto regulation strategy. And Yassine Elmandjra of ARK Invest explains why the investment firm sees Bitcoin going as high as $1.5 million by 2030. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies getting hit with a sell-off this morning as investors weigh inflation and the possibility of higher interest rates, but also take some profits after huge rallies in recent weeks. As of noon Eastern, Bitcoin traded back around $29,000, Ether fell to just under $2,000, and Solana dropped to around $23. Let's talk about the top stories. First up, SEC Chair Gensler faced a wave of criticism from lawmakers during a hearing on Capitol Hill yesterday. During the 4-hour hearing held by the House Financial Services Committee, Republican lawmakers challenged his ability to regulate the crypto industry, arguing that the agency is ill-equipped for the task. They also raised concerns that the SEC's approach of regulation through enforcement could drive businesses and talent out of the U.S. Gensler, meanwhile, argued that the agency would continue to pursue investigations until all companies come under compliance. Yesterday, he also refused to answer whether Ether is a security or a commodity.
Do you think it serves the market for an object to be viewed by the commodities regulator as a commodity and the securities regulator to be viewed as a security? I think no should be a very simple answer for you here.
I think
that uncertainty is bad, is it not?
And I think that Congress has said that there's one agency, the Securities and Exchange Commission, under this committee.
And you won't answer my question, and you're the head of that agency. So give me a break. Come on.
I'm answering it in the generic because you would not want me to speak about any one set of facts and circumstance.
Okay, but you've already spoken. Have you said anything about Bitcoin?
My predecessors and the agency itself has spoken to them.
Okay, but you're not willing to do the same about Ether.
Next, Federal Reserve Governor Michelle Bowman is doubting the need for a U.S. digital dollar. She expressed skepticism during a speech yesterday, noting the challenges that a central bank digital currency could present. And she argued that a CBDC could intrude on the privacy of users and harm the banking system while providing few benefits that aren't otherwise available for consumers. For the past few years, Fed officials have been researching whether to join other central banks in implementing its own type of cryptocurrency. A study released last year detailed pros and cons, but didn't take a stance. And finally, Intel will wind down its Bitcoin mining chip business just 1 year after the technology launched. According to a document on the chipmaker's website, Intel expects to stop taking orders of the series called Blockscale by the end of October and end shipping by April 20th of next year. In a statement shared with CNBC, a company spokesperson said, quote, "As we prioritize our investments in IDM 2.0, we have end-of-lifed the Intel Blockscale 1000 series ASIC while we continue to support our Blockscale customers." IDM 2.0 refers to the company's strategy to outsource its chip making to outside customers while it continues to ramp up its own production of smaller and faster chips. The statement also said Intel will continue to monitor market opportunities in the crypto space. All right, on to our main story. Earlier this year, ARK Invest put out its big ideas for 2023, and the investment firm laid out what factors could drive Bitcoin's price way, way higher by the end of the decade. I got the chance to speak with ARK Invest crypto lead, Yassine Elmandjra, about the biggest catalyst for Bitcoin's price and how investors should think about the current state of U.S. regulation. Let's just start off with the state of crypto markets right now. Bitcoin's back above $30,000, slight dip below it yesterday. How are you at ARK thinking about the price action in Bitcoin this week, and what's your take on sentiment?
I think we've been really encouraged at Bitcoin's resilience through what many are deeming a massive banking crisis and macro uncertainty, coupled with the regulatory uncertainty that crypto is facing. The fact that Bitcoin is now trading above $30,000, has closed its 5th week in a row above its 200-week moving average, is really just a testament to Bitcoin's resilience and that it hasn't skipped a beat despite some of this uncertainty.
Right. And I want to come back to some of that regulatory concern, but let me refocus for now on ARK's big ideas for this year. This report you put out just a couple months ago, you have some pretty aggressive price targets for Bitcoin by the end of the decade. Your bull case is Bitcoin at $1.5 million by 2030. How do we get there? Walk me through the type of adoption that would get Bitcoin above $1 million.
Absolutely. So when you think about Bitcoin as really the first strictly scarce digital monetary commodity. You think about gold as a $12 trillion market cap. Bitcoin right now, trading a sub $1 trillion. There's no reason why Bitcoin, being a better version of gold, can't reach parity with gold. The beautiful thing about Bitcoin is that the use cases are also additive. So Bitcoin might be used as a digital store of value, but it also might be used as an insurance policy against arbitrary asset seizure, as a global settlement network, as a currency catalyst for demonetization in emerging markets. So in our Big Ideas presentation, we lay out 8 use cases. We size this sort of top-down opportunity and put a penetration rate to that opportunity over the next 10 years. And our bull case is indeed above a $1 million price target.
We should note your bear case is still $250,000 for Bitcoin. That would mainly be driven by it being used as digital gold, like you said, or institutional investment, while that $1 million target would be driven by a whole host of other uses. Can you talk about how likely it is that we'll see Bitcoin's use cases for remittance or payments in emerging markets? How do we get there?
Yeah, I mean, I think we're already seeing that. I think Bitcoin's activity today is often underappreciated and dismissed because of all the price volatility. But last year, it's really interesting perspective, Bitcoin was able to settle $33 trillion worth of value on the base layer. That's 3 times that of Visa's, several order of magnitude that of several payment processors. So when you think about Bitcoin as this economic settlement network, it has been working and has been settling trillions of dollars a year. Furthermore, when you think about the market cycles, over 4-year market cycles, thinking a 30-fold increase over the next decade is inconsistent with what we've seen in previous market cycles. It is simply not true. When you think about the way that Bitcoin has responded in the face of this crisis and the way that it's responded in the face of previous bear markets, I think it's just been consistent with Bitcoin's price action as one of the best performing assets in the last decade. Let's
focus now on regulation. To put the question simply, what do you make of the current regulatory crackdown in the U.S.?
I think it's indicative that the U.S. really needs to get its act together and at least providing some regulatory clarity, because we're starting to see, companies not just pushing back here, but also acknowledging that if there isn't the right regulatory clarity, there's no reason why they wouldn't move offshore. So, if you look at the most recent statements by Brian Armstrong and his meeting with some of the politicians in the UK and his pushback on the Wells notice that the SEC issued, I think this is really just points to the regulatory agencies needing to acknowledge that crypto is a new asset class that requires an entirely new framework, and that the existing framework or any blanket generalizations that inhibit or prohibit the use of crypto is simply not going to cut it. So I'd like to see more regulatory clarity, and I do like some of the dialogue that has been created by some of these operators that are calling out these agencies.
What do you think is behind it? Because we have known for many years that the crypto industry has been seeking more regulatory clarity. And for those who have been around long enough, there was a time where regulators were very hostile against crypto. They seemed to back off for a little bit. So, there's been a wave of enforcement actions this year alone. And is there a higher reason for that? What exactly do you think is motivating that based on your research and the conversations you're having with people in the industry?
Yeah, it's a good question. I think there are 2 camps here. The first is perhaps a more conspiratorial view that crypto poses a threat to monetary sovereignty and the global hegemony that the U.S. has been able to command over the last century, and that acknowledging that perhaps this is a zero-sum game, and for every individual that realizes that Bitcoin is a hedge against this monopoly on money issuance, that poses a threat to the government largely. So there are those who are pointing at Operation Choke Point 2.0, creating some sort of concerted effort around inhibiting access to crypto. I think the other probably more likely case is that it's actually hard to regulate crypto in the current environment because of how different of a beast it is relative to other asset classes. And so if you want to regulate crypto in the right way, you're going to require an understanding of its intricacies in order to develop this framework. And I think, quite frankly, regulators still don't really understand its value proposition, and perhaps aren't willing to put the resources and time to truly try to understand it, because it's going to require a massive overhaul. So perhaps this is really just a function of laziness and lack of understanding, more than it is we need to block all barriers to access because it's going to threaten our livelihood.
Okay, so to what extent, how serious is this regulatory crackdown? Again, we were just talking about your long-term price targets. They're very bullish. And there's always the fear that the US wants to ban crypto, definitely the fear that, we're going to lose out to other countries if companies like Coinbase start moving to other jurisdictions. But in terms of Bitcoin alone, that specific asset, to what extent should investors be worried about the current negative regulatory environment here?
I think the U.S. should be worried more than investors should be worried, and more than Bitcoin should be worried. When you think about Bitcoin as a global phenomena, there's no reason why you can't see a flight to jurisdictions that encourage Bitcoin. And effectively, the U.S. is banning themselves from using Bitcoin rather than banning Bitcoin. The cat's out of the bag. Bitcoin lives and breathes on the internet. There's really no way to stop it. I think there's a way for the U.S. to, complement their existing operations and encourage and embrace Bitcoin. But I'm not worried about Bitcoin here. I'm more so worried about the U.S. Losing its edge as this leader in innovation, because Bitcoin's here to stay.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.